What's going on, traders? You guys have been asking for it, so I will provide. In this video, we're going to be covering the continuation model again. We're going to be backtesting the price action from last week. For those of you who are unfamiliar with the powerful continuation model, let me quickly explain. The model is really simple. The first step we're going to do is we're going to identify the higher time frame draw on liquidity. Now, identifying the draw on liquidity can be pretty difficult, but it's basically based on liquidity and imbalance. And for me personally, I identify my draw on liquidity based on some of the refined ICT concepts. I do teach these in a course, so if you are intrigued with the results, you can actually join my elite program, which basically contains a full course where I teach you exactly how to do the same thing as I do. And also, I drop daily outlooks, which actually aligns where I think the market is going to go. And currently I am doing this with an 85% success rate, which basically means that 85% of the time I basically call where the market is going to go before it happens. And I do all of this before the New York session. So if you trade the New York session, this might be very interesting for you. My elite members are making cash off of this. All right, enough chatting. Let's actually jump right into it. We are going to base our draw on liquidity for the higher time frame. We're going to base that on the 15-minute right here. Quickly going into the continuation model in detail, we have a bullish trend, for example, towards that draw on liquidity. We then wait for a lower time frame point of interest to be taken out. In this case, it is low. Then we see displacement through that previous high, tap into the FEG, and from there we can catch a continuation to the higher time frame draw on liquidity, or we just target the low hanging fruit, which is something that I always recommend to do, and just take your profits there. But usually I try to aim for at least 2 or to keep it as lucrative as possible. Let's get right into it. The challenge is really simple. We are going to be trading the London session and the New York session, and we are going to try and target 10%, which basically passes most Propfirm challenges. We're going to be risking max of 1% per trade. We can also go half risk. We will see how the price action treats us. Right, let's cover the price action right here on the 15-minute, which is on the right-hand side. What we can see is that the Asian session left a high right here, which we took out outside of the London session. But what I do know is that when the London session kicks in, it's likely going to hunt for more liquidity. What I do see right here is that we have relative equal highs. So for me, this is going to be our first draw on liquidity. To amplify my thought process, what we can also see is that right here, we also had a sweep. And this sweep right here was actually a level from the Asian session, but it also rebalanced. So all of these things combined with the sweep of Asian session itself give me confluences that we are likely to actually drive price a little bit higher still. And then after we take out that draw on liquidity, we will see where our next draw on liquidity could be. But overall, if we look at the chart, we are in a very discounted bit of price action. So I'm pretty confident that we will actually take this out. All right, so since the London session right here opened, we can now see that we took out a lower time frame low. Now, all we have to do is wait for displacement to the upside. And if we don't get that, that's fine, but then we don't have a trade. All right, there we go. Now we have the displacement we were waiting for. We have our market structure shift. We have a bunch of fair value gaps right here. So we can safely take a trade off of the breaker block and the fair value gap. Let me hit my entry right here. I will be covering the low of this leg right here. And then our target is going to be the draw on liquidity that I marked out, and I'm going to go with the low hanging fruit draw that we had in between the Asian session and the London session, which in this case, if it were to succeed, would net us around 2.8R. We're going to be risking 1% on this trade. It seems like we might not get filled here, and our draw on liquidity already gets taken out. As for right now, since we didn't really convincingly sweep it, I'm going to leave my order for a little while, but now of course we do sweep it, so I'm going to remove my order, and this is going to be a no trade. All right, so it seems like we actually liquidated these relative equal highs. Now it's going to be a little bit of a waiting game. We're going to have to wait and see where the price is likely going to go. My guess is that price probably has enough liquidity to start reversing to the downside again. And our first target is going to be this right here. This is going to be my draw on liquidity. Of course, I cannot really go in depth. This is something that I do teach in the course if you're interested in that. But for this video, that's just going to take a little bit too long. So what I am going to do is I'm again going to wait for a sweep of liquidity on the lower end of the time frame, but as we can see, we already smacked that draw on liquidity, so unfortunately we did not have an entry. Now quickly zooming out, given the power that we have right here, I'm pretty confident that price might actually start targeting this low right here, which now becomes our new draw on liquidity. And again, I'm going to wait for a liquidation of a 1-minute price point. All right, because the 15-minute basically didn't give us any kind of price action anymore, any lows, we are going to have to start looking at the 4-hour right here to actually get a valid point of liquidity that we could potentially target. And for me, the logical point would be this low right here. So for me, that would now be the higher time frame draw liquidity. That doesn't mean that I have to trade all the way to over there. I could simply stick with a point on the 15-minute. So let's wait for another bit of a high to form. We're going to wait for that to be taken out and some displacement to the downside so we can potentially capitalize on a continuation move. Now, of course, this has to happen before 5. If it doesn't, there will be no trades and we will be waiting for the New York session. Unfortunately, it's 5 a.m. so we're going to have to continue to the New York session. Alrighty, so we're now in the New York session. Now looking at the chart right here, I can immediately see that this is going to be my drawn liquidity, given that the higher time frame drawn liquidity is way lower than that. So now we have these two potential draws. We might be seeing a sweep of liquidity here combined with a rebalancement, which is really strong and might just drive price lower. Given that the New York session just opened and the New York session didn't really have a chance yet to sweep any of the liquidity, I'm going to wait for it to either form some relative equal highs that it takes out, so something along these lines. Only then will I be taking a short, or ideally we take out this high right here and then start continuing lower. But if we were to re-break this high, the probability of course becomes a lot lower, but right now I'm not going to aggressively enter, right? So right here we do have relative equal highs that formed. If we can take those out, strong reaction here, that's really good. So now what I would like to see violated is this swing low that we have right here. I want to see price displays below that, close below that. And as you can see, now price really has done that. Let's see if we have a fair value gap right here on the higher end. We do. So I can place my short right here. And the target is going to be the draw on liquidity. Unfortunately, price did not come back for us, so we did not get filled right here, but that's not an issue. As we can see, we have another sweep on the lower time frame right here. So this now becomes our anchor point and we can start looking for potential shorts up in this area. But let's first see if the market actually wants to pull back. And given that I do like the reaction that we had right here, and if we take a closer look at the displacement leg, and I know this draw on liquidity got hit, but this was just a short time draw. As you can see, this right here is our higher time frame draw on liquidity from the 4-hour. Let me quickly go back to that. As you can see, so given the strong reaction to this fair value gap, I'm definitely interested in taking a potential short right here. I'm going to cover this fair value gap right here because I do believe that it could potentially go back to it, but if it completely fills it, I'm no longer interested at all. And I'm going to target at least 2R. There we go. So that is going to be my order. I'm going to market execute it. We could have gotten a better entry, but in this case, a reaction is very nice. Right here, I'm noticing that we seem to be sweeping again. So we swept this previous high. We already have quite a decent reaction. So this might be interesting for potential scale in. We do have a shift. We have a really strong close, and it seems like we have a fair value gap as well. So what I am going to do, I'm going to take another short off of this fair value gap. I am going to cover this high right here. I'm again going to target 2R. I'm going to place a limit order. Let's see if this gets filled. And then this previous stop loss is going to go right above that previous high as well. So this basically means that this trade right now is completely risk-free. And that this trade right here, if we lose it, we only lose 1% and this one will break even. Let's see if we get filled. We do. And then the market starts reacting. And there we go. So that basically netted us these two trades, basically the main trade and then the scale in from that one move towards that draw on liquidity, which of course got hit. That basically netted us around 4R. And it's only 9 p.m. right now. So I do believe that the market still has something in store for us today. First, what I would like to see is that the market either starts reversing or is clearly indicating to us that it wants to continue displacing lower. And to me, that would be confirmed as soon as this 15-minute candle closes strongly below the 4-hour draw on liquidity. And at that point, I can start looking at a potential new draw. And I do believe that I saw that there was another low right there. So that's going to be this one. So I'm really not afraid of targeting this as my draw on liquidity, even though I will be a little bit wary because we are extended quite low right now. Let's look at how the daily candle is looking. The daily candle also doesn't really have a top wick. But given this strong momentum, I do think that before we start reversing, we are going to take out this draw on liquidity, mainly because it doesn't really make sense for price to drive this low, take this out and not reverse. That basically means that it doesn't have the liquidity it wanted for us to make that move higher again. All right, so it seems like we did have a sweep right here, but there was no follow through just yet. Now it seems like we are sweeping this high here as well. So let's quickly mark that. Now we immediately have a really strong fair value gap. We have our displacement through that previous level. So I'm not really afraid of taking an entry right here. Let's quickly see how we are premium discount wise, right? So premium discount wise, we are not really too good. So what we're going to do is we're going to use the breaker block right here to actually take our entry and see if price wants to retrace to that before it shoots off, or if it of course just straight up stops us out. We're going to cover the high that swept. So comfortable stop loss of around 3.4 pips. And then again, what we can in fact do is target the extreme draw on liquidity that we have, or we can go for this. But I'm thinking that targeting that extreme draw on liquidity would not be too bad, and that potentially right here we could go for some partials, or of course we do that at around 2R. Let's see where 2R is at. So right here we could be considering taking partials, and then we could let the rest of the trade run all the way to down here. So let's place the order. And let's see, it's a really strong reaction to that breaker block, filled up the FEG quite nicely, and our partial did not get hit. It's quite a strong move. What I'm presuming right now is that we will likely liquidate this before running lower again. There we go. All right, I suppose that's news. So yeah, at this point I will move my stop loss to break even, and I'm going to wait and see how this next candle plays out. All right, so what I'm looking at right now, I wanted to immediately continue to that draw on liquidity, mainly because we have this big fair value gap set up right here. So if we do not react to this one, then I'm assuming that we will likely go back up to this one right here. And that to me would mean that I'm going to be in drawdown, and I don't really want that. All right, so we closed above this fair value gap right here. So what I am going to do is I'm going to close 50% of my position, and I'm just gonna let the rest play out here. And there we go. So as we can see, that trade worked out perfectly. And I think we're already up 8.3%. So 8.3%, that's really, really good. And it's only 1043. And now right here, since we are taking out that major level, I do expect that price is likely going to be reversing, but I don't think there's going to be enough momentum for us to see a serious move. So yeah, I think I'm just going to call it a day here. It's 12 anyway, so let's move to the next session. Alrighty, so we have arrived at the London session on the 6th of Feb. Let's actually get rid of all the markup because all of the points in the draws on liquidity got hit. Alright, so looking at price right here, I am seeing that we are clearly heading towards this level right here. This is my draw on liquidity. And then as soon as we mitigate that and show some kind of reaction, I would be thinking that we are going to go for that liquidity on the downside right here. That's basically my view. So let's see if that works out here. All right, so we immediately go for that draw on liquidity because we are indeed reversing. I would like to see one of the highs here swept so we can take a continuation trade down to the Asian lows, I would say. All right, so this right here could be a potential sweep, but I want to see some follow through, set up relative equal highs right here. Super interesting. All right, so we take those out. And now we see that follow through. Let's use our premium and discount tool right here. And then I can see that if we were to use the breaker block right here, we could take a trade that looks something like this. As for our target, honestly, I'm pretty comfortable targeting because we have a lot of trendline liquidity buildup, right? So I'm pretty comfortable targeting the relative equal lows from the Asian session right here, which in this case would be around 6.36R. Let's see, let's set a limit. All right, we get filled. Price is running towards a TP quite smoothly. Oh, it's almost there even. So yeah, honestly, I think we can even extend our take profit. We could go for the start of the buildup of the trendline liquidity. I think that would be a very valid target. Unless I see price slowing down significantly, moving very smoothly. Let's see. I'm very tempted because right here we actually have a re-entry opportunity, as you can see. But of course, our TP gets hit here. And this was an 8R trade. It's a very nice one. So I think right now we would have passed most Propfirm challenges. And that was in 4 trades. So this just illustrates the power of the continuation model, but it's not just about the continuation model, right? It's mainly about establishing a proper draw on liquidity. As soon as you're able to do that, you can basically make any single model that is based on lower time frame liquidity work because you are trading where price is likely going to go, right? And if you can do that right 85% of the time, and you can also take some refined entries on the lower time frame, you're set. Let's actually look at these statistics, right? So these are the stats right now. 100% win rate. Of course, let's be honest, that's not realistic at all. The win rate is of course pretty damn high, as you can see with the backtesting data set that we do also have publicly available. If you go to my Twitter, you will find a post there. It is pinned and you will be able to retweet that, place a comment. And as soon as you do, I will send you a data data set where we have backtested this specific model, this continuation model, a lot of times. As you can see, 16.32% return, and I think half of that was from one trade, so that's absolutely insane. Only 4 trades. We only traded on Monday and Tuesday, and yeah, this was absolutely amazing backtesting session. Now, if you are intrigued by the methods right here, if you are intrigued by what I covered, how I look at the markets, I highly encourage you to at least start and join the free Discord server. There we can already have a chat, and if you're interested in being mentored by me, I do have some spots available. So if that's something you're interested in, you will be able to find more information about that in the description. Also, these videos, they do take a lot of time and effort. Maintaining this channel and community takes a long time and effort. So I would appreciate it if you could simply leave a like, possibly drop a comment telling me how you liked the video. And if you want to see more content like this in the future, I would really appreciate it if you could simply subscribe. Alright guys, that was it for me today. I hope you found some value, and I will catch you in the next one. Goodbye.